Good evening, investors. In today's episode, first we will do overall market analysis, then we will discuss an important event which is going to happen today, that is US Central Bank interest rate decision, and then we will discuss some interesting developments happening across some sectors and stocks. So let's begin. So today Nifty closed 91 points up, that is 0.36% higher, but there is one sector which is silently growing without making much buzz, and that is Nifty Bank. From last 11 trading session, Nifty Bank has closed in green. Now in banking space, the most important metric which we should look is price to book ratio. Now this is price to book chart of Nifty Bank for past 5 years, and you can see Nifty Bank is currently trading at a 4-year low valuation. Currently it is trading at a price to book value of 2. Historically it has made a high of 3.2, and the median valuation, that is we can say fair valuation, is somewhere around 2.7. Now within the banking space we have Nifty Private Bank and Nifty PSU Bank. Now if we look at valuations, then Nifty Private Bank is currently trading at a price to book value of 2 and PSU Bank is trading at price to book value of 1.2. Now looking at the numbers, PSU Bank looks more cheaper, but if we compare it to the historical valuation, then Nifty Private Bank are trading at a 5-year low valuation, while PSU Bank we can say are trading at a fair valuation. Now from a value investor point of view, it is a very good time to study this sector as there is a very high margin of safety because of low valuations, and since in the past we have seen rate cuts by RBI, and impact of those rate cuts will reflect in the books of bank by Q2 or the H2 results. Now if you don't know which particular bank to study, then you can track Bank Bees, which is a banking ETF. Now coming back to overall performance, again top performing sector was defense. 2% rise in Nifty India Defense Index. The reason we have already discussed in our daily analysis video of 15 September, which is approval of Defense Ministry on new procurement policy. Now today all eyes are set on interest rate decision to be made by US Federal Reserve. US Federal Reserve is central bank of US. Now how is it going to impact us? We will discuss that, but before, let's see what are expectation around interest rates. Now this table shows the probability of interest rate cut. Currently it is 450 basis points, that is 4.5%. So there is a 94% probability that rates will be cut by 25 basis points and will come down to 425 basis points, that is 4.25%, and there is a 6% possibility that there will be a 50 basis point cut and rate will come down from 4.5% to 4%. So there is a 100% probability that rate cuts are going to happen. Plus, US President Donald Trump has been pressurizing US Fed Chairman Jerome Powell from a very long time to cut interest rates. Now what rate cuts will do is, it gives an access of cheaper capital to invest in other asset classes. For example, Elon Musk has recently bought 1 billion worth of Tesla shares, showing his bullishness on US equities. Plus from this chart, you can see there is a positive relationship between the interest rate in US and US dollar index. When the interest rate rise, US dollar index increases, that means dollar gains strength. So inversely, when rate cuts happen, dollar weakens. Now with weakening of dollar, other asset classes start looking attractive, for example Bitcoin. Now this is a relationship chart between US Fed interest rate and Bitcoin price. Red line depicts US Fed interest rate and blue line depicts Bitcoin price. Now there doesn't exist an exact perfect relationship between both, but historically on overall basis we have seen when interest rates were falling or were at a very low level, we saw a price jump in Bitcoin prices, and now again when interest rates have started to fall, we have seen a rally in Bitcoin prices. Now again Bitcoin is trading at an all-time high price of 1 crore 2 lakhs, already pricing in the rate cuts expectation. Apart from Bitcoin, since dollar weakens, so emerging market equities also look attractive, and here is why it matters us. Now India is also the part of emerging market, but the problem is we are not the only emerging market. In my previous videos, I have focused on the fact that other Asian markets are trading at a very cheap valuations compared to India. Also currency wise, if you see the performance of rupee, it has been worst amongst all the Asian countries. So within emerging equities, FIIs have lot of options to invest, but from the past few days we have seen a slowdown in selling momentum from FIIs. Although at the time of recording this video I don't have access to today's FII buy sell data, but till 16 September, we have seen 10,204 crores of selling by FIIs. If I have to give it to context, then from the past 2 months, that is August and July, it has been somewhere around 47,000 crores. So US interest rate cuts will be a good factor for us, but in order to match valuations with other Asian markets or emerging markets, we need good Q2 earnings as well. The sector which will be focused on tomorrow will be no doubt IT sector, because with the rate cuts, the borrowing cost of US companies will come down. It will free up their cash and they can increase their discretionary spending on technology upgrades, cloud migration, software development, digital transformation, which will directly help our Indian IT companies. Since IT hold a good weightage in Nifty index as well, plus tomorrow is expiry also, so tomorrow is going to be a very important day for Indian markets. Now let's discuss some interesting developments happening across some sectors and stocks. So the export data for pharma has been out for the month of August 25, and the companies which have done really good is firstly Sai Life Sciences. It is a listed stock, 656% year-on-year growth. Then you have Newland, 456% growth, Laurus Lab, 75% growth. If you want, you can pause the video and take screenshot of this data for studying stocks from Q2 earning perspective. Overall, many pharma companies have posted good export numbers, but still there is an overhang over pharma sector related to US-India trade deal. Although as of now, pharma is exempt from tariff, but we don't have any clear-cut guidelines from US President Donald Trump that whether he's going to continue exemption or not. From an overall trade perspective, it looks like that we might get a favorable outcome soon, as we have seen a tweet from Donald Trump wishing our Pradhan Mantri Modi, and he also referred him as his friend. Earlier he was bashing India, calling it dead economy or what not, but now he has suddenly started to refer us friends. So although we can't trust this guy's mood, but let's see how things will turn out. Now coming to auto sector, Nomura has come out with a report maintaining a bullish stance on auto industries. They have estimated a volume growth of 8% for passenger vehicles, 10% for two-wheelers for FY26. Now, to give a context, historically for past 5 years, the CAGR of volume growth has been somewhere between 3 to 6%. The major boost will be GST cuts, and the stocks which they are betting on are M&M, Hyundai, TVS and Ashok Leyland. Also from the chart of Nifty Auto Index, it is very clear that index is standing very close to give a breakout. Now the stock which was on focus today was MCX. For those who don't know, as of now, banks, pension funds, insurance companies or other big financial institutions are not allowed to do commodity trading on MCX or any other commodity exchange platform. Now SEBI has announced that they are engaging with government to allow banks and FPIs to trade in commodity derivatives, which will overall increase the volumes at MCX and directly boost its revenue. Currently, it is just a plan or in process, nothing concrete is out, so keep in mind while you study this stock. So that's it for today, investors. I will meet you tomorrow. If you like the video, then please consider subscribing the channel and liking the video.